My guest today is Alon Muroch. Alon is the founder of SSV Labs, of course, building the infrastructure for high-performance, secure, decentralized Ethereum staking, restaking applications. Welcome back to the show, Alon.
Thank you for having me.
Now, I suppose we should just say it's a funny time to be recording a podcast, Alon, because as we record in my part of the world, it's Monday, 5th of August. I guess it'd be like early Monday morning in many parts of the world. And parts of the world, they'll be waking up and they'll be looking at various different markets today, Alon, and they'll be thinking, gosh, what just happened, right?
Yeah, it seems to be like a total bloodbath. I woke up and saw Ethereum down 20%. Even traditional financial markets are down quite significantly. We're basically got rolled back to the beginning of the year in terms of basically canceling out any profits made from the beginning of the year.
Yeah, that's exactly right. You look at Bitcoin basically back to before the pre-ETF run-up really happened. So yeah, the entire year's gains wiped really in just a week, but particularly accelerated to the downside in the last 12 hours or so, didn't it, Alon?
Yeah, it's actually the past week we've been kind of on a significant downtrend. In general, I think if we're looking at crypto, the market is kind of trying to rediscover itself for the past few months. The Ethereum ETF has interesting inflows, but it's not really impacting the market really, and not to the extent the Bitcoin ETFs were. And in general, yeah, the market is looking kind of trying to rediscover itself the past few months. So we'll see. We'll see how the rest of the year will go.
Yeah, and look, obviously it's way too soon to start to kind of dissect exactly what's happened or look for any real answers or ways forward. But just because, we're here talking about it, that's, I guess, what we do to some extent,
Yeah.
Alon. But I guess I would just say, does dumps today, does it have any sort of impact in your mind on Ethereum in the short term or the long term? Because it's just another kind of blip that we do get in crypto.
I think the short term is obviously people are upset about it, but I think the long term is pretty solid. Nothing really changed. We've been in down markets before. I think down markets are where things are being built, and up markets or bull markets where the profits are being taken. Building is still occurring on a massive scale, both on the kind of the greater Ethereum ecosystem and even specifically on this staking in world, and SSV and so on. So there's a lot of things happening and a lot of things being built up. Funny enough, the gas prices on Ethereum went up next the past week for some reason, but I don't know if it's a good or bad indication. But things are happening regardless, I think. People are building things. Bull market is always easier to raise money, and capital is cheaper and so on, but things are being built as we speak.
Yeah, and look, not to get too, I guess, gossipy, Alon, but I don't know, again, maybe it's too soon to say, but I don't know if you saw the speculation today that I think, Jump Crypto, the crypto arm of Jump Trading, were perhaps liquidating some fairly big ETH positions, even staked Ethereum, some of it, over the last few days, and maybe that could have contributed to the gas prices as well.
Potentially, yeah, potentially. I mean, in terms of the amount of capital I saw that as well. I mean, in terms of I think it was $300 million. In terms of the capital itself, it's not a big amount of ETH staked. But if you dump $300 million on the market, that's a whole different thing. Yeah, I mean, it could be. It's anyone's guess at this point, I guess.
That's right. Too soon to say.
Yeah.
All right. Well, let's move on. And I guess we're really here to talk about SSV Labs, what you guys are doing with the whole staking ecosystem as you continue to build it out. So, yeah, do you want to just kind of start from the top, Alon, and we'll talk about, the brighter futures rather than what has been happening in the market today. So, yeah, please explain a bit about SSV Labs and we'll get into it.
So if we look at, from 10,000 feet, staking on Ethereum is, I think, the bedrock of a lot of different use cases. So one is securing Ethereum itself. Obviously, that's the main reason why people are doing staking, or the main functionality of staking. But now we're seeing a lot more than that. I mean, of course, the DeFi branch of staking has been active for the past few years, and now with risk staking that comes along, and now we're even seeing interesting developments in extending staking not just to Ethereum or the L1, but also extending that to L2. So how do you potentially use the validator set of Ethereum to actually secure and sequence L2s as well, and improve user experience with pre-confirmations and other. And so in general, staking is becoming this bedrock on top of which a lot of things are being built. And in that, there's legacy way of doing staking in terms of how do you actually go about doing staking, which is, you have this software called the Beacon node. You connect a validator client, which is another software, and you run your validators. Now, that's all good and fine until you do it on a massive scale. On a massive scale, and this is one of the things we're seeing right now, is that there's a lot of centralization forces happening on Ethereum, which result in few entities controlling the vast majority of stake on Ethereum. That's super risky. That's if we're talking about regulation, compliance, censorship resistance, robustness, slashing prevention, and so on and so forth. All of those things require a much better infrastructure than staking. So if staking itself is the bedrock, then you need the right tools to make it as secure as possible. And so our mission really at SSV is to shift from this legacy way of doing staking, which is kind of using single point of failure type of setups, transitioning it to what we call distributed validators based on distributed validator technology, where the idea is that all of a sudden validators on Ethereum, which again is kind of, piggyback on what I said before, it's not just securing Ethereum anymore, it's doing a lot of different things. Instead of being run by a single entity, it now can run on SSV on multiple entities. That's better liveness, better security, better slashing prevention, better censorship resistance, and so on and so forth. It's a really new paradigm in infrastructural, and that's how we see that. And so our vision is to introduce that to the Ethereum ecosystem and accelerate the adoption of DVT technology, so to the point where most of the stake on Ethereum will be in the form of distributed validators versus the legacy setup we're seeing today. And so that's kind of the mission at the beginning. We've fully launched 2 mainnets in the beginning of this year, and accelerating pretty fast and getting a lot of projects building on SSV for those exact properties.
And so you've been working with various platforms and other entities across the Ethereum ecosystem, Lido being a big one, right, Alon?
Yeah. Lido, we've came to your show, like a month ago maybe. And Lido has this big program called Simple DVT. It actually has a bunch of different other programs that SSV is involved in, but we've talked about Simple DVT, which is Lido's first attempt to really diverge thousands and thousands of validators from its centralized, whitelisted set of operators to DVT setup. And so that's with Lido, but we're working with a lot of others like Etherfi, Renzo, Buffer, and others. Institutional stakers, we've talked before about ETFs, and so ETFs are interested as well. And so in general, this is really the mission, to kind of partner up with those big platforms, big protocols that do staking, and shift them to using SSV.
That's right. And I understand that you just hit like 1 million staked ETH, is that right?
That's all new, Andy. That's we're almost at 1.3 right now.
1.3.
Almost, yeah. So we're growing really, really fast. We're actually about to overtake Binance. If you look at Radar.network, overtake Binance to be the 4th largest protocol to manage stake on Ethereum. So and hopefully we'll get to the top 3 in a few months. So yeah, this is moving pretty fast. We're super excited about it because again, fast adoption is key to that. We really want people to using distributed validators versus the legacy setups. But also it opens up a lot of different interesting things. Like again, we're talking about expanding or extending the roles that validators on Ethereum can do, and I think SSV provides a good infrastructure for that going forward. again, this bedrock of staking, I think, is not a static. It's ever evolving. It becomes new things as we go along, and I think it will already is playing a major role in the Ethereum ecosystem.
Yeah, so talk about that a bit then, Alonso. You're talking about wanting to move people away from, I guess, like legacy idea of staking through to what you guys are doing. But there's, so many different groups of people or entities in crypto, certainly in Ethereum. You've got traders, you've got individual holders, you've got people that are just maybe getting a little bit of exposure through ETFs and, other investment entities like that. So a lot of different moving parts. Some people are, less inclined. Some people are more inclined to want to dive, deep into what Ethereum is and how they can get involved with staking their Ethereum, but not everyone does. So how do you kind of, I guess, make the case for people and educate them and keep the ecosystem evolving forward?
Yeah. So this was a dilemma which we kind of talked internally about when we started. How do you get adoption? And I think that we've made a decision which is the correct one, which is to focus on developers. Developers are the ones that decide how their infrastructure looks like, what type of infrastructure they choose, and they do the work for those users ultimately. Might it be people, just putting a few ETH at stake in their favorite LSD or LRT, or even institutional stakers deciding to use an ETF or an exchange. Ultimately, there's a developer at the end that decides how you convert ETH into staked ETH and manage all of that. And so by focusing on those developers, we could really talk with a person that actually understands the value proposition for distributed validators, the added value, the technicalities, and why they should move from legacy to DVT. And so we've been true to that ever since the beginning. We're heavily focused on developers. Most of the interactions we have in terms of the team and the type of project we're on board are starting with the developer, explaining the technical reasoning why they should move, or why it's better, why it's a superior technology, and so on. And so the end user might not even know they're using SSV, and we are really good with that. I mean, the end user means the best user experience they can get, depending on the type of service they choose. But we want to get or convince the developer that provides that service to use SSV. And so that's really the focus we have. This is what SSV is oriented towards. Again, we're an infrastructure. We're not a staking service. And so it's not really built for people which have, let's say, 2 ETH they want to stake. It's built for the developers that offer those services. So we've mentioned Lido before. Lido is the service where you go and stake your 2 ETH. Behind the scenes, we want Lido to move to SSV, and they're doing that.
Yeah, of course. So how does that process then work? So obviously, I guess in one sense, a lot of people in Ethereum know each other. So, you all interested in working towards similar goals. But how does that outreach work, with all the different partners or people that you're potentially looking to integrate with, or just, developers working on projects and they just want to come and use your tooling? Yeah, is there a bit of outreach, or just people know that you guys have good tooling and they can rely on it?
I think that there's really 3 layers to it. One is obviously the personal layer. So, going out, reaching the developers, explaining, and so on. The second part is really education. So we've been educating about DVT for many years, trying to make the case that distributed validators are superior to any other legacy type setups. And so that really, slowly but surely kind of gets people to understand and want to try it out. And I think that the last kind of third part, which is, I would say, where most of adoption and acceleration comes from, is really, it's a network effect. So, when you have 1 million ETH at stake, it's easier to get to 2 million ETH at stake because people already have this history and experience with it, and so they can recommend their friends. As you said, this industry is very interconnected. And so if you have a bunch of different developers building on SSV already, other developers can reference that and say, okay, this works for them, this is how we want to do that, evolve that, and so on and so forth. And this really, I think, the biggest accelerator in terms of adoption. And of course, always building better tooling, building better ways of interacting with SSV. So one of the things we're working on right now is SSV, distributed validators are built on this concept that a cluster of operators execute or operate a validator. A cluster is just a set of operators, a group of operators. But we've identified that there's a lot of different entities, really big entities running a lot of validators. They want to transition and use distributed validators, but they're limited. They're limited because they're already running a bunch of validators on their own and don't want to share their revenue with others. And so they only run on their own infrastructure, or they have some coordination issues, how to coordinate with others and use their operators and so on and so forth. And so it limits them to how they use SSV. And so we've came up with this concept called mega clusters. The idea is that, if a cluster is responsible for one validator, a mega cluster is responsible for many clusters of validators. And it's a coordination layer. It's a coordination layer where you can take, let's say, 4 really big entities that each one, let's say, runs 5,000 validators. And instead of using their own operators to run those validators, they can coordinate with one another and use each other's operators. And so they actually benefit from having a very decentralized infrastructure without any additional cost. And so those types of developments of how you interact with this infrastructure are also key for adoption, because it opens up doors for better usage and give the ultimate value to those ultimate entities. So if you are running 5,000 validators, that's 150,000 ETH. If you can have better infrastructure, more decentralized one, which is not correlated in any way, that means that if your server is down, your validator continues to work because other entities are running other servers. It means that there's no correlation in terms of regulatory enforcement or regulatory risks, such as shift resistance, stuff like that. That ultimately, if you're running 150,000 ETH at stake, you want to have all of those properties. You want to have the best, most robust infrastructure you can get. And so it's not just about education, personal interactions. It's also about enabling those types of use cases that empower those developers to build better infrastructure, which was not really available before. And there's a bunch of different other examples like that. But I think that by definition, if you're using distributed validators, there's much more you can do to better your infrastructure than you would have had running legacy. And so I think that's a bunch of different things all coming together. And I think the more adoption you'll see with SSV, it opens up more doors to other use cases and more adoption.
Yeah, and look, I mean, that was a great term. I like the term you used, Alon. I think mega clusters. So in terms of, just explain again, give us a couple of examples of who a mega cluster would be when it comes to having all of that, I guess, liquid staked ETH or even,
Sure.
restaking. So who would the mega clusters be? What do they look like?
So if we're going back to the original problem, right? How do we distribute existing validators? We have over a million validators on Ethereum staked today. So imagine you are a big entity and you have, you're managing for your users. You can be an institutional service that runs validators. You can be an exchange. You can be an ETF. You can be a liquid staking protocol. Regardless of how the ETH is coming to you, you have a bunch of ETH, let's say 150,000, 200,000 ETH. Up until this point, you've been running those ETH all alone because that's exactly the service you're offering. So you earn money for running infrastructure for a bunch of different users, each one with their own type of staking. But ultimately, you're running in a centralized way 150,000, 200,000 ETH. Now, that's really great, but also it's very risky. It's very risky because you're exposing yourself for any type of scenario that can or compromise those ETH. And so you're saying, okay, let's move to SSV because it's a distributed infrastructure. But in order for it to be a fully distributed infrastructure, it's better for you to not run it on your own, just on your own servers, but maybe use other services or other operators to distribute that. So instead of running a cluster of only your operators, maybe run a cluster with your operator, and 3 other operators which belong to other entities. Then you're really preventing correlated risks. You're really preventing flashing risks. Overall, you have a million times better infrastructure. Now, the problem is, how do you get there? Because as a business, you don't want to rev share, right? Because, if you're using somebody else's infrastructure, then I need to pay them, right? But if I'm paying them, my profits are lower. And so you have this coordination problem of how do you get a really big entity that wants and is able to use other entities, but has this coordination problem of how do you do that? Now, if you have one entity with that problem, for sure you have other entities with those problems, and you do. You have close to 100 of those entities. So mega clusters is a way to do that exact coordination. So how do you, 4 entities, each one running, let's say, 150,000 ETH, so 600,000 ETH. How do you take those 600,000 ETH, run them on this mega cluster, and each entity, it doesn't cost any more to any of those entities. Those entities don't need to run more infrastructure. And so you basically have the same amount of cost, the same amount of rewards or profits for each entity, but through using this mega cluster, you're having 100 times better infrastructure. So this is the mega cluster type of approach. You take individual independent entities that run existing validators and convert them from using only their own infrastructure to using the mega cluster participants infrastructure as well, with zero additional cost, zero rev share, but ultimately 100x better infrastructure. So mega cluster is that coordination layer. It's a set of smart contracts that manages everything I've just explained in a very, very easy way, intuitive way. And so it kind of unfolds a lot of complexities within it, but because you have this smart contract which coordinates everything, it becomes a simple task, and everyone is better for it. The entities themselves are better because they're using better infrastructure. Ethereum itself is better because now you've reduced centralization points, mega centralization points, and you have much less correlated risk. And so it's just a win-win for everyone, but you have to have that coordination layer, and you have to have SSV for that. And so by building those building blocks, you can get much, much better infrastructure for what we're doing. And so mega cluster is an additional step. So we have SSV as the infrastructure. Mega clusters is built on top of SSV to take it even a step further. And we started to talk with a lot of different operators about it, and potentially next month we'll be starting doing testnets with it. And you wouldn't believe, first, how many of them really want that and understand the value proposition, but you wouldn't believe even how big they are and how willing they are to move hundreds of millions of dollars from using mega clusters. And so I think this is one of the vectors that SSV should be focusing and is focusing on.
Yep, it makes sense. Thank you, Alon. What about, Ethereum itself? I guess, the Ethereum roadmap, what's coming up in terms of any Ethereum improvement proposals, any EIPs? I'm sure you keep an eye on them. Anything to be aware of, anything that you're excited by, slightly concerned about, and how does this affect your SSV and what you guys are building?
So Ethereum is going to be undertaking a massive fork, probably towards the end of the year, early next year, which is called Pectra. It has a bunch of different things in it, but one of those things is actually an EAP that introduces bigger effective balances for each validator. So currently, validators on Ethereum are limited to 32 ETH. A bigger, let's say you've deposited 33 ETH, that additional 1 ETH doesn't serve you anything, not for staking itself and not for rewards. So 32 ETH is really the max effective balance any validator can have. Pectra, that's going to jump from 32 to 2048. So 64x the amount of maximum effective balance. It basically means that you can have much bigger validators in simple. The reason why the Ethereum Foundation went for it is actually to reduce a lot of the or a lot of the network traffic that's happening on the Beacon nodes, but they also enable to actually consolidate validators. So you could take existing 64 validators and consolidate them to one. That basically means bigger validators. Talking about mega clusters before, it goes on kind of parallel tracks, because bigger validators means more risk, and more risk requires better infrastructure so you can manage that risk. So overall, I think Pectra, with this maximum effective balance increase, I think that's a net positive for transitioning people to DVT. And I think it's also net positive just in the sense of how cost it is for running an Ethereum validator, which potentially could increase the amount of solo stakers as well. And so overall, I think it's one of those things that I think are very, very beneficial, and it's supposed to be happening the end of the year or the next year.
Got it. Thank you, Alon. All right. Well, look, as we begin to finish off this part of the podcast, Alon, just explain again, where people should go if they want to learn more about what you guys are doing. I think it's pretty clear that, SSV Labs, your company, what you guys are doing, very aligned with Ethereum itself. For people that want to, potentially make use of your services, what is the best place for them to?
Sure. So SSV Labs is the core team behind SSV.network, which is a DAO governed permissionless protocol. So if anyone wants to learn anything about SSV, just go to SSV.network. There's a lot of information out there, and you can see the different explorers showing the growth and progress of SSV. There's a lot of developer documentation. If you want to join, you can run a validator, you can run an operator, and you can join the kind of development community. And so, and of course we have Discord, Twitter, all of the usual suspects.
Yes, indeed. Excellent. All right. Well, links are in the show notes, but SSV.network, everything is there. All right. Well, it's kind of time to finish off the podcast, Alon, and I think we may have done this before with you, but we'll do it again because, why not? It's a crazy day in the markets, so we should at least try and end the podcast on a positive note. We'll probably talk some markets as well. But of course, we do finish, Alon, by running you through the very famous scripted conversation hot take round. Are you up for it?
Yeah, I'm sure.
All right. I guess we would just say for question one, let's say we just begin with, Alon, what would you say is your firmest conviction, crypto opinion?
My firmest conviction, I think, is the Ethereum is central hub for innovation for the crypto space. I think that this is becoming more and more obvious, both in terms of the technical innovation, but also in terms of actual use cases for crypto. This is a very firm belief I have, even if it doesn't show in prices today.
Yes, indeed. Been a lot of hype over AI for good or bad over the last 12 months or so. BI also, UBI is a potential fix, Alon, for AI-induced automation. I know OpenAI have just conducted a big UBI study, had mixed results. But what do you think? UBI is a fix for AI-induced automation. Good idea or maybe not?
I'm not entirely convinced UBI is a thing that can actually work, to tell the truth. I know of a bunch of different initiatives that tried to kind of research and actually kind of try to apply to the real world. I'm not entirely sure. I think it's theoretically a good idea, but doesn't really come and meets reality very well.
All right. Bill Gates, of course, famously said that we tend to overestimate what we can accomplish in 2 years and underestimate what we can accomplish in 10. 10 years' time, anything you like here, Ethereum, SSV.network, what does it all look like?
Wow, 10 years. So I think in 10 years, it's a good timestamp from today to actually talk about the next generation of crypto holders. And I think that the next generation will potentially be 50% in crypto, 50% in traditional finances. That means that they will have both Apple Pay and also some crypto wallet, and with both they will pay everywhere. That means that they will have a traditional bank, but also potentially some positions in DeFi and other future instruments on crypto. That means that their children potentially will be 100% in crypto. And so this is my projection going forward. 10 years is a generational leap, literally a generational leap in who's going to be building stuff. And so this is how I see the future.
I like it. All right, Alon, let's kind of flip that concept then. We'll do that by using a quote by William Gibson, who, of course, said that future is already here. It's just not evenly distributed. That in mind, what's an example of the future being here right now, but most people aren't aware of it?
the ETFs. I think that's something people underestimate. So we've talked about mass adoption, but we have two massive bridges today that unequivocally connects everyone in the traditional finances to crypto and vice versa. And I think that we underestimate how much of an impact it is. It's not the future. It's already here. It's already built. Now, the question is how many cars will drive on top of those bridges. But that's for the future to decide. But we have those bridges and we did not have them in the past. And so I think this is the future today. And I think this will be kind of a building block on which a lot of capital will flow into crypto, meaning that a lot of people will have positions on crypto, meaning that crypto is 10 steps further into mass adoption that we actually think it is. And so that's kind of my 2 cents.
I'm sure you've been in crypto for a little while, Alon, but looking at the markets today, I don't know, on a scale of 1 to 10, or just how bad do you think today's events are kind of on the longer scale of crypto?
On the longer term, it's meaningless. I think that people tend to forget those things, but I think that in general, we're used to those cycles happening every 4 years. Half of the cycle is good, half of the cycle is bad. Potentially, we're shifting away from that. We might have seen that in the past, in the previous cycle, where the timing wasn't really 100% what we thought it is, and now it's shifting a bit more. So I think in overall, that's a positive thing. I think living an increasing and growing market with those 4-year cycles is too aggressive. I think we need to shift into something which is a bit more linear, if you will. So potentially this is a good thing, and the correlation with traditional market is interesting as well. So we'll see. I think it's obviously pretty bad objectively, but I don't think it indicates anything for the future.
Very well said. All right, let's start to finish this off, Alon, and we'll do that by asking you, what is your favorite science fiction book, film, or TV show? I can't remember what you said last time, so we'll find out. Maybe you'll say something different. I don't know.
Probably Iron Man, but once watching Deadpool and Wolverine, that's definitely my favorite one right now. Anyone who didn't see the movie, definitely recommend.
Yeah, I just saw it about a week ago myself. Yeah, it's a lot of fun.
It's a lot of fun, super fun.
Yeah. All right. Yeah. Well, look, thank you for coming and spending some time with us on the show today. Kind of a historic day in some respects, just because of what's happening. Funnily enough, Alon, I remember like 4 years ago when I'm sure, like me, I'm sure you remember where you were the day that the great COVID crash happened, when markets all around the world crashed a month or two into COVID. And I remember that night I was doing a podcast, of all things, just like I am now. I was talking to can't remember who I was talking to, but it was it was a grim mood. I must say today is not quite as bad, so it can't be all bad, Alon.
Yeah, it can't be all bad, but who knows? It could continue to go down. But I think again, it's not an indication of the future. It's an indication of the past. The future for crypto in general is very bright.
Very bright indeed. All right, let's leave it there. We'll finish it off. Just shout out any websites that you'd like to point people to, and of course your own Twitter, anything like that. Please go for gold.
Yeah, anyone who's interested in learning about distributed validators, please go to SSV.network. And in general, follow us on Twitter, my personal account, and obviously the SSV Labs account. We'll have to have you. We'll love to have you.
Awesome. Thank you so much, Alon. All the best, and bye for now.
Thank you, Andy.
All right, there you go. That was Alon from SSV Labs. I said I couldn't remember who was on the podcast with me on the great COVID crash of 2020, but I can remember, of course, it was Manib from Stacks, and as I say, that was that was a terrible time. That was because I don't know. I think Bitcoin lost like something like 50% almost. Should look that up, but yeah, it lost a lot of value that day, as did crypto. So that was just today Yeah, what Bitcoin was down to about 50,000, I think was the low today. So yeah, today not quite as bad, but certainly, yeah, a rough day in the markets by any standards. Who knows? By the time you're listening or watching this, a week will have passed. Who knows where we'll be? But yeah, crazy days, never a dull moment. We'll leave it there, folks. This was the Crypto Conversation for Brave Bitcoin. Thanks for watching. Thanks for listening. Bye for now.